Well, it's the end of another month, in fact halfway through the year, so it's a great time to assess how our property markets are performing. Now, the media remains full of negative messages and consumers are getting concerned about rising interest rates, rising inflation and even the talk of the possibility of a recession. Of course, that's exactly what the Reserve Bank wants. It wants us to stop spending, it wants us to stash our cash so as not to inflame inflation. But how's all this affecting our property markets? That's what I'm going to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, as he shares with us his end of June property market update. Hi, Andrew.
Yes, good day, Michael. And it's not just the end of June, of course, it's the end of the financial year. Of course, no surprise that the latest house price data is showing in Melbourne and Sydney, particularly, a decline in prices growth and an easing in prices growth in the other capital city markets. This is the first quarterly result that we've had since we've had higher interest rates and, of course, since we've had an impact certainly on confidence. So no surprise, we've got Melbourne and Sydney house prices have fallen over the June quarter. Sydney house prices down by 1.6% and Melbourne similarly down by 1.7%. Now, Michael, this is the first decline in quarterly house prices that Melbourne and Sydney have recorded since the lockdown of June and September 2020. Of course, that was when the markets were shut down because of COVID restrictions. But in reality, this is the first cyclical downturn in prices for Melbourne and Sydney we've had since the middle and end of 2017 and into 2018. So we've really had 4 or 5 years of prices growth in between the past or the last cyclical downturn. And we know that house prices have increased substantially since that period. But the other capital city markets, Adelaide and Brisbane, Michael, have continued to increase, albeit at a lower growth rate. Adelaide was up by 2.6% over the June quarter. It is now the leading performing housing market for house prices. And Brisbane up similarly by 2.4% over the June quarter. Of course, that's well below Brisbane's peak performance at the end of last year, December quarter, which was nearly 12% increase over the quarter, and similarly well below Adelaide's previous peak increase, which was around 7%. So markets are easing. High prices have impacted affordability. Buyers are now being sidelined, of course, because of high prices. And we've also seen the satisfaction of a lot of pent-up demand that was created through the lockdown period of COVID. Perth's been a steady result over the June quarter, similar growth rate to what it recorded over the March quarter.
Now, Andrew, in a moment, I want to understand your outlook moving forward. But before we do, I think it's important to reassure people that these cyclical movements in the property market are normal. There's a whole lot of first home buyers who've recently purchased who haven't experienced property cycles before, investors who haven't experienced downturns before. This is what happens, and these downturns are temporary, but the long-term uptrends are permanent, aren't they?
Well, housing markets are particularly well positioned, Michael, given, notwithstanding that we will enter a period, it is the winter selling season upon us now, which always is a period of declining buyer and seller activity, particularly in the middle to higher price ranges. We do have concerns over the economy in terms of inflation. So it will be a quieter period, and a period given rising negative sentiment with a lot of obvious narratives regarding the outlook for house prices, and that will be added to with the latest data showing prices now falling. But we know that our markets actually, compared perhaps back to 2017-18 with similar circumstances and into 2019, that fear factor tends to be a short-term energy in housing markets, particularly now when we've certainly got demand well ahead of supply. We're still building around 30% fewer homes than we were 5 years ago, Michael. And we're now on the threshold of, with borders reopening, of a wave of mass migration, surging student numbers. First home buyers will be taking advantage now we're into the new financial year of the extended first home buyer deposit scheme. Investors, of course, are keen to continue to see their incomes rising with skyrocketing rents in those tight rental markets. So, demand does remain ahead of supply in our markets, but in the short term, of course, buying and selling decisions will be affected by a lot of negative headlines going through. And I guess the point is that by the end of the year, I think that we'll start to see buyer activity improving as those value opportunities present themselves, as it did back in 2019 when our markets revived.
There are many factors driving our property markets, and interest rates are only one of them. As we've already mentioned, the supply and demand in the economy. But in fact, consumer confidence is a very important one. And clearly at the moment, the consumer confidence is on the side of concern. But in due course, as you say, greed is going to overtake fear, and people are going to just have to get on with their lives. They're still getting married, they're still having babies, they're still getting divorced, and people are going to upsize, downsize, move house. And so the markets are going to continue on. So putting that into perspective, what do you see happening in the future? What's the outlook?
Well, certainly we will see continued easing in prices growth in Sydney and Melbourne. As I said, Michael, and as you indicated, sentiment will be an important short-term factor in that, with buyers and sellers sitting on their hands in the shorter term. We've seen that before. Adelaide and Brisbane, although still growing quite strongly, will continue to push downwards, again, influenced to some degree by negative headlines. But the force in Brisbane and Adelaide is about affordability, given how strong their prices have grown, has sidelined buyer activity with those high house prices. But as you said, Michael, over the medium to longer term, buyers and sellers don't put off those generic decisions about a bigger home or a smaller home or moving to the bush or to the beach. Life moves on, and Australia's housing market has proven itself to be particularly robust and resilient. But of course, in the shorter term, there will be concerns over the direction of the market. It does fuel the clickbaiters to a large degree, but we are in a position where demand is clearly ahead of supply in our housing markets. And with demand continued to grow going forward, and really no prospect of matching supply and demand over the medium terms. But we are moving into, and if I could get a little bit of Shakespearean here, a winter of discontent to some degree, but the sun will shine and re-emerge in spring.
It will. Spring has followed winter for 2,000 years, and I'm putting my money on the fact that it's going to happen again this time, Andrew.
Absolutely, Michael.